Tuesday, April 15th. And just be forewarned. I mean, this is something that I've been meaning to do. I know it's tax day today. You can use your tax return however you want. My suggestion is to buy tools like Trendspider and Seeking Alpha and Alpha Picks, blah, blah, blah. But last night I decided I'm going to do my last will and testament. And so it's funny because in the form that I was filling out, it said, do you have any final statements that you'd like read or, stated to your beneficiaries, blah, blah, blah. And I basically put the statement in. And FYI, I went on Perplexity and I said, can you help me do my last will and testament? And it guided me to a free website where you can put it in that's provided by charities because they want you to leave money to the charities. So my last will and testament, the statement is, I did this will like I lived my life. I did it in 15 minutes on a free website. If that gives you an idea of my personal thought process of what's going on and how much value I put in actually doing things like the last will and testament, yeah, maybe I'm not the best guy to follow on the internet about the markets and stuff like that, but I have had some success and I haven't spent much time. And again, the money that I use on the tools, it saves me time. So free website, but I used Perplexity to find it. So it was pretty good. It's Alpha Picks Day. And if you don't know what Alpha Picks is, it's Seeking Alpha's curated portfolio. And I was a paying member before I became. You can see the portfolio return 120% versus the S&P during the same time period got 42%. You will get an Alpha Pick today at noon. So I don't know what it is, but I can tell you from the last 6-7 times that Alpha Pick was picked, my plan and my strategy is to set an alarm at 11:58 a.m. because it comes out at noontime. Refresh the fuck out of that page till 12 o'clock and have my phone on Webull ready to make that buy, because within the next 2 to 5 minutes, you could make up to 10%. I may try it. If I'm not doing this podcast, I may try it. We got a lot to talk about today. Tariff on, tariff off. Who knows? Who knows what's the best strategy that the high net worth group that I'm in thinks? We will go over that one. Just FYI, it's the title of what it is. Stocks continue to see inflows. Cramer last night went over his boring portfolio based on a Wall Street Journal article. So we'll go over those names to stay away from. I'll publish them in the newsletter. Actually, some of them are pretty good, to be honest with you. Webull, which I just told you I'm going to use to buy the Alpha Pick today to try and scalp a little bit. It was an IPO yesterday. It was halted multiple times. It went up something like 400%, 600%, somewhere in that neighborhood. Palantir's back in the news. NVDA. Why I think Google's a buy. How the Mag 7 is just trading like crap. Bank of America, Citigroup beat. We'll talk about tonight's earnings. And Netflix is, I think it's Thursday. Doji candles. And for paid members, for paid newsletter subscribers, I'm going to give you 2 stocks that are just, I think, part of the tariff deal. One avoids the tariffs because it's a foreign stock, and the other one might be part of the negotiation to actually get, more goods, more revenue, and it might be part of it. We saw this morning the Chinese are saying, "Hey, we're not buying any Boeing planes." So maybe this one is used as, a little leverage. Where are the cues? Yesterday, it was okay. It was okay. I mean, the tariff game is what it is. And until this game is done being played, I don't think you're going to move. You're going to have volatility. Like I said yesterday, you want to watch the VIX. If the VIX spikes again, let's see. Why is that advanced search VIX? Let's type in. Why is this not pulling it up? VIX to the S&P. There it is. It is down 0.23%, 30. When it spikes up, you want to start buying. As it starts to slide down, you want to take a little, little off the top if that's your thing. But again, the VIX is there. Where's the 10-year? Go over to the bonds, and you can see It's at 4.39. Nothing huge. 3 months ago, it was at 4.78. So we're coming down, but it's not coming down fast enough. You do have a Fed meeting coming up in May. So you want to keep an eye. A couple weeks ago, too, I said LVMH may be the canary in the coal mine. And I read this on Seeking Alpha. And it was a good theory that, hey, luxury goods have held up. Well, now they're not. Now they're not. The sales dipped 3%. And you can read which particular areas. By region, European sales rose. Down in the U.S., amid a volatile economic environment, Japanese sales were down. While the rest of Asia, including China, saw trends similar to those in 2024. So, again, they're going up in other parts of the world. The rest of the world is winning. The U.S. is not. LVMH might be the canary in the coal mine that tells us, hey, for the next 6-9 months, we may just see a sideways market. So it is what it is. The future's little change as traders continue to play the game of guess the tariffs. Where will they be today? Where won't they be today? What's he going to take off? There is one person that is in charge of this market, and it is Donald Trump. And ultimately, that's what it is. So what do you want to do? What do you want to do? Many of my fellow high net worth friends choose VOO and chill as a strategy, even for the long term. Like when I'm saying, hey, I think Apple's a good buy. They're like, what are you, out of your mind? Just buy VOO. These are people that are worth $10 million more. Okay? Studies show people are willing to pay 4 times more for a lottery ticket if they can pick the numbers rather than a random selection. That's an illusion of control in market corrections too, as everyone pays more attention. Trying harder often leads to worse investment results. And this is just the S&P. Ben wrote a fantastic misbehaving in a volatile market. You can read this one. It is a great one. Again, what's a strategy? You could literally just do VOO and chill. That is a strategy. Just find entries. And if you have a job and you're just, hey, I just want to add money. Remember the story of, God, I forget his name, but it's again, Ben wrote it. Tom or whatever his name is, who just bought at the peak. Just keep adding. Just keep adding. This dude bought at the peak from 1970 through 1985, somewhere around there, and he still wound up retiring as a millionaire. Just make sure you have a plan of putting money into the market. Don't time the market. Time in the market beats timing the market. So while you're down here near the 200-day at 428, maybe a time to buy. As you're below the 50-day, you can see we haven't spent much time below the 50-day. I will tell you one thing that you know about Donald Trump, and he's done it in the past week. When shit starts to go sideways, he starts to bail shit out. And he's the one who said it. I saved the bond market. He didn't save the fucking bond market. He didn't do it. He took tariffs off, saves the bond market, and then puts them back on. If the bond market responds, James Carville said it best. If I ever come back in life, I want to come back as the bond market so I can intimidate everybody. The bond market rules this. So understand, VOO and chill is a real strategy. But what do you have yesterday? On the daily, you've got a death cross. You've got a death cross, and it's not good. Nothing good happens under the 200-day. So if we go look at the daily, you can see VOO has the death cross. The MACD's low. The RSI has been lower. Last week, it was at 21. More than likely, that was just a dead cat bounce where it needed to bounce up. And maybe you go sideways. Maybe you come back down here. You haven't changed a trend. The 9-day, rather than trending up, is just trending sideways. The 21, the 50, and the 200 are starting to move down. Now, when you go to weekly, have you been here? No. We're still moving down. The 50-day hasn't started moving down. The 200-day is still positive. So if your outlook is long-term, don't be afraid to start adding to positions. The 4-hour algorithm over the last 2 years wins 63% of the time, 19 positions. Okay? So I do think there's a good time to add. I don't think this is sounding for alarm because he could take the tariffs off and then all of a sudden we're back in the running. And that's it. Now this note from Dan Niles, masterclass. Just go and read it. During the recent sell-off, 65% of the technical 17 metrics I cared about the most signaled oversold. Historically, about 48% is what is needed to be in a traditional tradable short-term bottom in the stock market. It is important to note that this is not the absolute bottom for stock prices. Nobody is calling the bottom. And I was on Spaces yesterday with Shai Bulor and Scott Redler. By the way, nobody loves talking about Scott Redler more than Scott Redler himself. Red Dog, I think he calls himself. I just find it funny. I mean, he interrupted me and said he had to go on the radio. It's just funny. But again, nobody's going to call the bottom because nobody knows the bottom because the fucker could come out with 50% tariffs again. And then all of a sudden, market bottom's even lower. So there's one person that can call the bottom, and you better have an alert on his Twitter or Truth Social, because we went over it yesterday. Some dude turned $1,000 into $1.5 million within a day just on 0-day options. Okay? The good news is, like Gunjan says, investors keep pouring money into the U.S. market. There was $50 billion of inflows into the U.S. stocks last week, the largest inflow of the year. People are trying to call the bottom, but the market is not cooperating. Does that look like a market that just got the largest inflows of the year? Doesn't to me. Doesn't to me. Still looks like it's on a downward trend. But you've got to start looking at your portfolio and what makes you feel comfortable. Okay? Look at the S&P year to date. If we go over here to the screener and we just type in the S&P, okay, and we let's see, I think we can, well, I guess there is no year to date here. Let's see, we're just going to Google it. We're going to go and Google the S&P stocks year to date return. I think it's usually, Slick Charts usually will tell me this. Okay. Continue without supporting us. I don't support anybody. But you look at the year-to-date returns, okay? Here's the one. CVS, Newmont Corporation. I actually own this one. It's up 47% year-to-date. Philip Morris, Cencora, Consolidated Edison, ED. It's not erectile dysfunction. It's ED is the symbol. Vertex Pharmaceuticals, Palantir, Republic Services, McKesson, Uber is up 21% year to date. Okay, Molina Healthcare, which is an alpha pick. AT&T, which I would never in my wildest dreams expect that to be in the top 20 gainers year to date. But a lot of these are up 20%. So in the newsletter, I'm going to publish, Cramer went over some of these names last night as good buys. I don't know that you want to stay away from him. He's not any better than anybody else at figuring this out. But United Healthcare was one he brought up. And he said, hey, I need to put this back in the, there. Oh, it is in there. The core investments. UNH was one that he brought up. Do I want to buy into this one right now? I don't think so. Because you can clearly see that 550 is resistance and it hasn't held it on its pullback. Meanwhile, the MACD's down below. CNC, I think, was one that he said. Do I want to buy into this one? Centene Corporation? Maybe one to come back up here to 77. I mean, where did I get that one from? Let's look at a weekly. Did it come back here? Yeah. Look at that. I mean, that seems to be where it wants to be. And if you go over here and we look at CNC, and there's a long name. I'm not going to go over every one. But it's a strong buy in the quant. Maybe he's right. This is managed healthcare. Then he went into McKesson. Then he went into a former alpha pick, Cardinal Health. He said maybe that's one you want to buy. We can go and look at this one. This one's up near its 52-week high. He brought up Waste Management as one. Garbage is still going to be there even in a recession. It's going to be, it's boring. But look at that stock. It's trending higher. Maybe 208 is the support level because the MACD has pulled back while the stock has traded sideways. Is it going to go back up, or is it going to continue higher, I should say? Maybe. It's near its 52-week high. Wall Street still, it's 2% away from its Wall Street target. So I don't know necessarily that I want to go into this one. But you saw CNC, maybe that's a good one. Palantir he brought up. Palantir, the valuation is absolutely crazy. But they just got something from NATO. Okay, the valuation is absolutely nuts. But the growth, profitability, momentum, and revisions, it's all good. And it's year to date up 22%. But do you want to go into this one knowing that, hey, the valuation's crazy? And maybe on their earnings that are coming up, let's see, May 5th, maybe the valuation resets. I don't think so. I don't want to touch this one. On a weekly, you still have a very large MACD. You still have an RSI that just hit 50. It's not oversold, but it's a meme stock. And he brought up, I just said, hey, ED is in the top 10 of stocks year to date. Well, look, the algorithm just got a buy-in at what, 111? Is this one you want to buy? Looks like it's pretty damn good right now. But then you go over here to ED and you find out from a dividend perspective, it's got a 3% yield. And this is, Consolidated Edison is the Northeast. This is where the power is going to need to be. So I don't think it's bad. And he brought up Coke. And whether you like it or not, even with RFK talking about sugary drinks, this is up 16%. Now, I've said this before. When you get to 70, you start to trim this one. Okay? And then you buy back down at around 60. It will go back down to 60. Okay, the 4-hour algorithm makes you as much as buy and hold 15%, and it just got you in at 71. It only wins 32% of the time. Am I buying at that 71? No, I am trimming this stock. But again, I'll list these like 15, 20 names that Cramer brought up. It's a good list. Gold is in there. You've got cybersecurity with both Palo Alto and CrowdStrike. You've got Axon, which is a bit of a name that I'm shocked that he brought up. I don't know if he owns it. I don't exactly know. He didn't bring it. It is what it is. But that list is a good list. Now, I often talk about Webull. Webull was up 374% yesterday. Okay? Let's go and let's take a look at this particular stock, because what I want to do is I want to show you it was a SPAC. So when you see something like this, okay, a SPAC trades at $10, and it's just basically they hold the symbol of BULL, and then the company becomes public. And this is a 5-minute chart. So you could have bought in here when it opened up. Realistically, you had the chance to buy this at 26. It was halted multiple times. Huge gains, huge gains. Let's turn on the after hours. Is it up? No, it's down. So first off, SPACs, Special Purpose Acquisition Company. So it's a company that basically holds the symbol BULL, and then Webull comes in and they give a bunch of their business to the shareholders, the SPAC, and then the SPAC promotes the damn thing. And they don't have to go through any kind of regulation, no regulatory stuff. They don't have to post anything. It is a trading ability. But you can see on this 5-minute chart yesterday, during the day, you had absolute ability to buy into this with confirmation, and if you wanted to trade it. So again, there are opportunities in this market, but if it's too volatile for you, remember, strategy of VOO and chill is a good strategy. We talked about Palantir. Here it is. Palantir popped 4% after landing a deal to supply NATO with AI-powered battle systems. Palantir just continues to kill it. It's an $80 stock. I need to pull this. If I just go and look at Palantir, I need to pull the thought that this is a $70, a 40 or $20 stock. I need to reset my thinking that it's an $80 stock, and you can clearly see the old resistance at 80 has turned into new support. So as it gets down towards 80, as you get into 70, I think you can buy this with a long-term horizon, because we don't know what this earnings going to come with. I know Alex Karp is going to get on there and say, we're the only company that can save the world. And that's a leader that you want. He's a good leader. You buy good companies with good products, with good profits, and good management. And this is good management. So the 4-hour algorithm, it wins 50% of the time. 24 positions, it wins 12. 88 was where it got you in. Okay, you're still in. You still have confirmation. The MACD, super low. The RSI just at 59. So if you want it, again, this isn't in my portfolio. It's not one that I particularly have a fondness for, because I got out at 25 only to watch it go to 120. So it does have 120 in it, but it's expensive. You can see the quant thinks it's a hold. But the only thing that's bad about it is the valuation. You're paying 166 times forward earnings. That to me is crazy. And even with the growth, with the PEG ratio, go and Google the PEG ratio. Understand what it is. You're trading at 5.69. That factors in price to earnings to growth. And Peter Lynch and legendary investors will not touch a stock that's over 2. And this is 5.69. So even the growth may not be able to come up with the valuation, but people are holding this stock. And that's it. So NVIDIA ticked up because these guys are playing the game. They're playing Trump's game. They announced that they will manufacture and test their chips in the US. What does Trump do? He promotes them. I think NVIDIA is a great buy. Okay, I don't think it's going to do 300% like it did last year. I don't think you're doubling your money this year, but I do think you have 130 in this, and that would be a substantial move from here. The earnings are coming up on May 21st. The MACD is super low. It is rejected off of this oscillator before when the stock was at 116. So I don't know what the catalyst is going to be, but they're playing the game well. If you can get this under 100, I think that's a good buy. The algorithm wins 57% of the time. You're at 109 right now. I'm sorry, the 109 was the buy. You're at 110. Your average win, 18%. That's over the last 2 years. It's back tested, the 4-hour algorithm. Okay? I like it. Now, this particular video shows what you can do with Google's AI. Google is killing it. They are displaying and they are integrating all of the AI stuff into real world possibilities. They are one of the few companies that's doing this. I watched an entire YouTube video last night on how you can have agents, how you can create videos, how you can create music, how you can create everything that you need to create, how somebody with a new product can create an entire marketing campaign in 15 freaking minutes for free. For free. They are miles ahead. Real world applications. People and businesses are using it today. That's what this video is about. Okay, I'm trying to optimize my podcast, responding to my emails. I haven't yet. Just so you know, if you get a response to an email from me, it is handwritten right now. I'm developing a workflow to upload my notes, to create the actual newsletter. AI is a real idea. I use it today for thumbnail and episode titles. So it's real world. And then long-term Alphabet investors have happily paid 17 to 18 times their earnings. We're nearing that valuation now. This is the PE ratio. Look at the trend, okay? 20 times trailing PE. And if we go and we look at the 4-hour algorithm, It makes you 17% over the last 24 months. Doesn't work, but I believe in the business. I'm not trading this on the 4-hour algorithm. I am trading this around this range, okay? Between 151 and 190. Where's it trading right now? 162. I like that range. Why do I like that range? Take a look. If you go to the weekly, where does 151 come in? That's the 2021 highs. It's a better business today than it was in 2021. The danger that you have is that ChatGPT, that Perplexity, that Claude, that all of those new AIs are going to take away their search capability. But I think Google is strong enough, and they're showing real world capabilities. They even integrated Microsoft Outlook into their new AI, where it can send emails, where an AI agent can send emails out. I like Google. I like it. Is it my most favorite stock? No. My most favorite stock is still Apple. It's still 50, 60% of my portfolio, and that fucker is down under 200. If I didn't have so much money into it, I'd be buying that one in a heartbeat. They just have a way of coming back. And this is the time where the seasonality, we'll look at that one with Apple. But Google, down here, it's a hold from the quant. Is it expensive? Maybe. But their forward PE is 18. Okay? Their growth, they are still growing, unlike Apple. 13% revenue year over year, but they're spending a fortune on AI. But I think they are one of the leaders in AI. So as it goes through, I like this company. I like where they're going. And you can take a look at Analyze with AI if you have any other questions on this one. The competitors are Microsoft, Amazon, and Meta. I own a bunch of Meta. I own way more Google than I own Meta, but I just started my Meta position. Last week, I started adding to Meta significantly. So you can read all about it in that AI report if you want. But again, Google, I like. Trendspider. The Mag 7 weighted PE ratio is its cheapest since January 2023. You were hoping all last year, God, I wish I could get these stocks cheaper. Why haven't you? I still believe in the Mag 7. I may be the only one. Because based on Spaces yesterday, everybody hates it. Now there's an ETF, MAGS, which is a equal weighted Mag 7. Has it done well? Well, 4-hour algorithm over the last 24 months, 16 positions, it wins 8 of them. You make 88%. Seems to time the bottom pretty well. Okay, these two buys, not great. Now, do I hold this one? No. Full disclosure, I am not buying into this one because I have a ton of Mag 7 exposure. I own QQQ. I own all of that stuff. But heading into earnings, this may be an opportunity. Who knows? And if they're not giving forward guidance, but if they do say, hey, we're still spending, that may be good for NVIDIA. As far as earnings go, Bank of America, let's see. They beat. Let's see. We're going to show you this one. Bank of America beat as net interest income. We talked about net interest income, sales and trading revenue rise. They're up 2%. Okay. Citigroup beat. They beat. They're up 1%. Both of those. The banks are too cheap. Bank of America to me was just under 40. You can still get it under 40. I think it's a $40 stock. It's at 37 right now. The algorithm got you in yesterday at 36.46. Great buy. The 4-hour algorithm makes you 45% versus 32%. Again, why are you not getting Trendspider and the 4-hour algorithm? Sign up for an annual plan. Go over to Linktree right here. It's the top link. You can get Trendspider and you can get the standard plan. Okay, the standard plan or the premium or enhanced or advanced. Let's go to premium. Premium is saved 36%. Go and look at the prices, okay? If it's within your budget, I do suggest the advanced because the advanced comes with 52 trainings per year, which means 1 per week. And say you take a vacation, you can take 2 in the next week. And that is a training from a product expert. And they will guide you through using the platform. And again, we just went over Bank of America. We just went over Citigroup. What do you have coming up? Interactive Brokers. IBKR. Interactive Brokers reports tonight. Algorithm has you in at 164. Wins 48% of the time. Maybe that's a decent one to buy. Under the 200-day? With all of the damn stock trading that's going on? Let's look at Seeking Alpha. Where does IBKR come in? It's a hold in the quant. Why? Valuation. Well, let's take a look. It's expensive. It's expensive. 23 times forward to earnings. It's expensive. You analyze with AI, and maybe you can find another one. Charles Schwab Corporation, Robinhood, which is great. LPL. Maybe some of those are within your risk tolerance. But again, Interactive Brokers. United Airlines reports tonight. UAL. Is this a good one as it's come down? Or are they going to fall into the LVMH thing? I don't know. The 4-hour algorithm, it only wins 30% of the time out of 28 positions, but you make 65% versus buying and holding makes you only 56. Got you in area 67. Literally, a couple months ago, this was $100 stock. We can go and look at this one. Is this a strong buy in the quant? It's a hold. Okay, was it a strong buy? It was. It was a strong buy all the way up until 110. And then it dropped off. And it almost timed it perfectly. And it's because consumer confidence dropped. But you're on the lower end of your 52-week range. What does Wall Street think that is worth? They think it's a $96 stock, 46% upside. So do they say something that maybe Delta didn't? Maybe they're seeing things as fine. Maybe they're seeing international travel pick up. Who knows what they're going to say? But Earnings Hub is the place where I look at all this. The one that's coming up that I really like is Netflix. Netflix aiming for $1 trillion market cap. Okay, a Wall Street Journal article reported Monday. People familiar with the matter say that management wants a $1 trillion market cap. In pre-market, it's up 1%. I like Netflix. Okay, they start saying that they're going to increase international expansion into places with good broadband. What's the market cap today? 398. Okay, that's doubling your money from here. If you double and it's a $1 trillion market cap, that means you're going to 2,000. Nobody thinks this is worth $2,000, by the way. Wall Street thinks it's worth 1,065. They have chased it up. This has been a masterclass in stock price. This has been a fantastic, fantastic return. 1 year, you're up 53%. Year to date, you're up 4% and down market. 5 year, you've doubled your money at 125. Any stock that doubles your money in 5 years versus 7, it's a good stock. So I do think that Netflix has the ability to get to a $1 trillion market cap. Do I think it's this year? I don't think so. But I think it's possible. I'm holding this one. When it gets to 1,000, I'll trim it. But I bought and held it for a very long time. Now, education portion. This is a video from Ross Cameron, Warrior Trading, and it's about Doji candles, okay? He teaches you how Doji candles typically signal a reverse. It's a reverse indicator. And it's a very short video. You can go and watch it. But what I want you to do is go and look up what a Doji candle is. If your scanning software doesn't allow you to search for a Doji candle, let's see, does Trendspider have it? I think they do. Yeah, blue Doji. You can look for raindrop blue Dojis. JP Morgan. Does it have this is starting a reversal. Blue Doji on the daily. 4-hour algorithm got you in at 224. 4-hour algorithm makes you 81%. Buy and hold makes you 85. It's negligible. And you win 67% of the time. 18 positions over the last 2 years. So go and find blue Dojis. It's a good one. Now, for paid members, I'm going to do a separate podcast. It's going to be a bonus podcast. 2 stocks. two stock. One stock that I think is poised because it's probably included in the tariff negotiation deal. More than likely, it is included in the tariff negotiation deal. And then one stock that is just foreign. So I don't think it's included, but it was a stock that you could turn $5,000 into $1 million according to Perplexity. So between those two, I'm going to give you a little analysis of that. If you have any questions, hit me up. Remember, VOO and chill is a strategy. It is. In a market like this, when one person is controlling the market, it is a strategy. You know, I'm as frustrated as anybody. But Bank of America, I own, and it's up 2%. You know, Newmont Mining, I own. That one's one of the leaders in the S&P. So there are stocks to win that are winning. My portfolio is overall down. I wouldn't expect my portfolio to be up. With Apple trading at around $200, I just, you know, and it's starting the year off at $260. I just can't imagine my portfolio would be up. But there are reasons for that. And again, as long as you have a conviction and a reason to stay in something, then there's no reason to get out right now. If it's too low and you want to put more money in, just make sure it's a good company or just put money into VOO. Again, most of the high net worth people, they're just VOO and chill. You know, they don't have the risk tolerance for things like Apple. I do. So if you have any questions, hit me up. Again, we have an alpha pick at 12 o'clock. You got a sale on Trendspider. Any of the links on Linktree, or you can get the paid newsletter, which again, I'm going to have a couple of stocks for today. Okay. Have any questions, hit me up.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.